Hi, good afternoon, everyone. My name is Eugene. I'm a partner of RDS Partnership, and I'll be the moderator. Welcome to part 2 of the Road to Bursa Malaysia webinar series. So we have 3 parts. This is part 2. The final part 3, will be next Wednesday, 1st of March. I will start off with introducing our panelists. So we will have 2 speakers. The first speaker is Mr. Wong Kong Loong. Mr. Wong Kong Loong is the Vice President Listing Development of Bursa Malaysia. He's responsible for development of initiatives and strategies aimed at enhancing the attractiveness of Bursa Malaysia. He began his career in the auditing field and brings with him 20 years of experience in the banking and finance industry, having served in various positions in both Malaysian and foreign financial institutions. So he will be sharing with us on the listing preparations and considerations. The other speaker will be my colleague, Lily. Lily is from the RDS Capital Markets and M&A team. So Lily is a founding associate of RDS Partnership, and right from the beginning in her career, she has been focusing in capital markets, especially in main market and ACE market IPOs, and she will be presenting on the importance of corporate governance. So just very quickly, before I hand this to Mr. Wong, just very quickly, in the last 2 years, not only we have seen quite a number of IPOs, quite a lot of interest in IPOs, especially ACE market IPOs. But if you look at IPOs, there's also a very diverse business which these companies or these applicants, we have seen companies which have listed. We have got one which is, their business is rearing dairy cows and the sale of dairy cows milk. We have seen the first company which is in the pawnbroking business. So essentially they operate pawn shops. There was a company which was listed, and they operate a medical center, just one medical center, which specializes in gastrointestinal liver diseases and obesity. We have a company last year which focuses on the processing of cup lump rubber into block rubber, and many more. In fact, last year there's a company which was listed on Leap Market, and they essentially are in durian plantation. They are durian planters, so it's quite exciting. There's a very diverse diverse companies seeking listing. Okay, so without further ado, I now invite Mr. Wong to share with us on the listing preparations and considerations. Mr. Wong.
Thanks, Eugene. Let me just share my screen. Right. Can everyone see my screen?
Yes.
Okay, great.
Yeah.
Thanks, Eugene, for the kind introduction. Good afternoon, everyone, and thank you for joining us today. For those who have attended the session last week, my colleague Farish shared with you earlier on the current performance of the IPO market, the regulatory landscape, as well as a summary of the listing requirements. For my session today, I'll be sharing with you on the preparation steps and key consideration when undertaking a listing exercise. When preparing for a listing exercise, one of the first things to do is to determine the listing feasibility. There are 2 areas to consider here, which is the regulatory benchmark and market benchmark. For those who have attended the session last week, the regulatory benchmark will include the listing requirements, as well as other factors such as having an identifiable core business, good management team, healthy financial position, and overall business prospects of the company. You will also need to ensure that good corporate governance practices are in place. There is no existing conflict of interest, and the company's business does not undermine public interest. Most of these points have been covered in our last session last week, and I'll go through some of these points later on. In terms of market benchmark, this is driven mainly by market expectation, which is basically the perceived value of your company based on the prospects. Investors will consider factors such as the business model, financial performance, and future plans compared to other similar businesses. They will also look at track record of the promoters, directors, and management team. Another important point is the company's position in the industry against its competitors. These are some of the factors that investors will take into consideration before investing in an IPO. Not only are these factors important to investors, but to the principal advisor as well. This is because the principal advisor will act as the underwriter for your IPO, and they will have the responsibility to ensure that they can ultimately sell your company to investors. Companies like FarmFresh and Citos, for example, have done a very good job in benchmarking themselves against the market. The next step is to outline your business strategy and future plans. Here is where you need to demonstrate and clearly articulate your business strategy and future plans to the investors. Having constructed a good narrative enables you to ascertain if your company will be attractive to investors. That said, make sure you outline realistic future plans and not something that is overly optimistic. At the end of the day, not only the regulators, but more importantly, investors must believe that your plans are viable and achievable. Next is prepare your preliminary listing scheme. This is where you will need to discuss and consult with your internal stakeholders and advisors on the appropriate shareholding structure. Control by existing shareholders will be diluted subsequent to listing. This is because new shares are issued to raise funds. Some existing shareholders may also want to sell shares as part of the listing exercise. So it is important for existing shareholders to consider and be aware of the level of dilution post-listing. It is also very likely for you to undertake an internal restructuring exercise and streamline your business processes for the IPO. This is where you need to establish a corporate structure for the listed group. Usually, when undertaking an IPO, a new entity or vehicle will be established to acquire or combine the existing companies under one holding company, which is the listco. There will also be changes to the business processes, which needs to be optimized following the acquisition or combination of a few companies into the listed group. The way you do things moving forward will also change with a focus on adopting better corporate governance practices. Finally, identifying potential IPO issues. These will include issues such as conflict of interest, related party transaction, and so on, which I'll touch on in the later slides. Once you have made the necessary preparations for the IPO, then the next step is to get things moving. Plan early. This will involve things like shortlisting your advisors and engaging them early on to plan out your IPO process. Outline your business potential and long-term growth plans, which we have discussed earlier. Time your IPO, especially on the timing for listing and the market conditions then. Post-IPO, you will have up to 6 months to assess the market situation and determine when is the right time for you to launch your IPO. It is also important to get the right team on board for your IPO journey. A qualified CFO should be appointed at least 6 months before you submit the IPO application. This is to ensure that the company has the necessary experience to comply with the regulation and reporting requirements. For the external advisors, you also need to find the right external advisors with established track record and experiences in completing IPO. We will share more on this topic in our following section next week. Having a good financial track record, especially the profit track record, will also play an important role in considering the valuation for your company. As you may be aware, many IPO are priced based on price to earnings multiple. This will lead to the next point on valuation. It is important that you price your IPO correctly. There are cases where a company wants to higher valuation upon listing and therefore price their IPO too high. This can result in a lower take-up rate or cause the listing price to go below their IPO price on the first day. Therefore, it's important not to be too aggressive on your valuation and consult with your advisor what works well for your company in the long run. The next few points on ESG, equity story, investor relations are also important considerations that you must take into account, as these factors plays an important role for investors to decide whether to invest in your company or not. Finally, being designated as Sharia compliant stock has advantages in terms of a wider pool of investors. This is because certain institutional investors or fund managers can only invest in Sharia compliant stocks, or they may have a larger pool to invest in Sharia compliant stocks only. Here are some of the common issues we observe from companies undertaking an IPO exercise. Conflict of interests or related party transactions are the most common issues which must be addressed early on. The most frequent ones will usually involve founders or promoters. If there's any other similar business managed by the founders or promoters outside the company seeking for listing, it is advisable to group them together for listing. If not, this can give rise to a potential COI situation. This also includes any related party transactions, which must be conducted at arm's length. All licenses, permits, and authority approvals must be in place before submission of your application. We have seen cases before where certain renovation or extension done to buildings did not obtain the necessary approvals, resulting in the IPO application being withdrawn or worst case being rejected. Such outstanding issues also reflects poorly on the corporate governance standards of the company. Another point is on the auditors. Many companies intending to go for IPO may not be aware upfront that they may be required to change their auditors if they are not registered under the SE Audit Oversight Board. Only auditors registered under the AOB list can act as the reporting accountants for an IPO exercise. The way you prepare and report your accounts will also change from Malaysian Private Equity Reporting Standard, or MPERS, to Malaysian Financial Reporting Standard, MFRS. Hence, the conversion of the accounting standards will most likely have an impact on the revenue and profit recognition as well. Future plans. Again, make sure you outline realistic future plans and not something that is overly optimistic. It is therefore very important for you to be open and discuss with your advisor on any issues that you may have, so that any potential concerns can be resolved early and not delay the entire IPO process later on. You can also consult with Bursa as we provide a guidance on the listing process. In terms of timeline, for main and ACE market, it can take up to 1 year from the time you prepare your IPO application up to the listing date. As you can see, it can take up to 3 to 4 months to prepare the submission, and this includes time spent on appointing your advisors, structuring the IPO, and undertaking the due diligence exercise. It will take another 3 to 6 months for submission of application up to the approval of authorities. The process here will involve authorities reviewing the application, addressing the following up queries, and arranging for a site visit. Another 3 to 4 months is needed to secure your investors, finalize your underwriting agreement, launch your prospectus, and finally listing your company on the exchange. For lead market, the time frame is much shorter as there's lesser documentation involved, and the offering type is different as well. Timeline is usually around 6 months for lead listing. Listing expenses. For main market, the total listing expenses is around 4 to 10 million, and 3 to 5 million for ACE market, and around 1 million for lead market. If you look at the recent listing, roughly 80% of the total listing expenses is made up of professional fees, underwriting, and placement fees. The fees to authority comprise mainly of the initial listing fees and annual listing fees, which makes up around 10% of the total listing fees. Remaining 10% is allocated to printing and contingency expenses. Usually, the larger the IPO size, the higher the listing fees. These are the list of approved advisors. There are 17 principal advisors, which can act for all 3 markets. And there's 10 corporate finance advisors, which can act for lead market. Finally, this is our team. Please feel free to contact any one of us if you have any queries with regards to the listing process. We are happy to assist you if you have any questions with regards to the listing exercise. Thank you. That's the end of my presentation. Back to you, Eugene.
Thank you so much, Mr. Wong. So for our participants, you can communicate, you can contact with the Bursa Malaysia team. Their contact number and the email address is in the final slide. And of course, the common question which a lot of participants will pose to you, Mr. Wong, is can they have your slides?
Sure. Yeah. Sorry, let me share. Yes, you can have our slides.
Yeah. So you probably have it in a PDF form.
Yes, we will email it across to you, Eugene. Probably then you can share with the participant.
Okay. So just very quickly, for the participants, if you look at the bottom of your screen, there is a Q&A function. So as the presenters go along, if you have a question, we have a short Q&A session towards the end after the second speaker. So if you have any questions, please jot that down. Now, I also want to add to what Mr. Wong has presented. So he has said that in his presentation, IPO consideration. So do plan early. Do plan early. The reason why is typically when companies when they decide to embark on IPO and they're given a timeline. So of course you want to ensure that the best possibility to the best of your ability, you can actually go to the market while the market is still hot. But there are issues to resolve. There may be issues to resolve. So legal issues, for example, you will have to ensure that you comply with the relevant laws. You will have to ensure that you have your relevant licenses, your properties comply with the relevant laws, and all of this. If the due diligence working group in their due diligence findings find out that you need to rectify, that may take some time. That may take some months, and that may delay your submission. So do plan early. And of course, I know for many companies, you don't know what you don't know. So you may want to bring on board advisors as soon as possible to advise on whether you meet those requirements. Now, the next presenter is my colleague, Lily. So the importance of corporate governance, if you can look at, if you've seen the main market SC equity guidelines, the first limb in Chapter 3 is an applicant submitting a proposal to the SC is expected to have good corporate governance practices. And for ACE Market Guidance Note 18, in assessing the suitability of an applicant, the sponsor would be looking at the applicant's corporate governance record. So corporate governance is a very important component of the IPO process. Okay, Lily.
Hi everyone, thanks Eugene for the introduction and also Mr. Wong for the informative presentation on the listing process. So now I'll be speaking on the importance of corporate governance. Okay, as you were informed by Mr. Wong earlier on the IPO process, we'll now be focusing on 4 timelines specifically here. So that's the PAP/PCP stage, the submission of your listing application stage, the approval stage, and also the registration stage. So basically 1 month before the submission of the listing application to the regulators themselves, the applicant must submit either a preliminary admission pack for main market listing or a pre-admission consultation pack for an ACE market listing to the regulators. So this is basically a summary of document whereby you would include information of your business, your group structure, your subsidiaries or your associate companies, the information of your promoters, directors, key senior management, and also your proposed directors, independent directors, and most importantly, any matters to highlight here. So here is where you would then highlight any non-compliances or even anything that deviates from the listing requirements, guidelines, or any laws and regulations, and also provide the reason why. So during this stage, we will have to ensure that our due diligence is actually almost 80% to 90% done and the company should have already brought to your advisor's attention as to any of your concerns or any non-compliances in the past or in the present as well. Okay, and then thereafter, usually after a few rounds of queries from the regulators would have to decide if you could proceed with your actual submission or not. So if they have decided that you cannot submit, there may be many reasons, but typically the reasons will be due to, as Mr. Wong has mentioned, your non-compliances. So you would then have to work towards fixing these problems prior to submitting a fresh PAP or the PCP to the regulators. So should your application be given the green light, you would then have 1 month to work towards submission. And this is also to be noted that in the event if you are unable to submit your actual listing application within a period of 3 months, you would then have to file a new PAP or the PCP to the regulators. So this is something to take into account. Okay, and then after submission, the regulators will usually have queries, many rounds of queries where you would have to address and answer them in a timely manner. And within 6 months, the regulators will then provide you with their response as to whether your application is approved or rejected. And during this period of time, if it is approved, you would then have to update your prospectus with all your new listing information. And depending on the timing of getting your interim financial accounts audited and update the prospectus accordingly. Thereafter, you would have to register your prospectus and then go for listing lah. And that would usually take a few months as well. So do remember on this timeline here, as we'll be speaking about it in my subsequent slides. Okay, so in speaking about corporate governance, I have split these into 4 areas of topic, all of which are things to be addressed in the PCP and PAP stage itself. Okay, so we have the MCCG as the first one. The second one is the integrity of your directors. The third one is in relation to compliance with relevant laws. And the last one is the non-compliances. Okay, moving on. So on MCCG, it is a set of guidelines that basically provide the principles and recommendations for good corporate governance practices in Malaysia. It was first introduced in the year 2000 and has been revised several times, with the most recent one being effective from April 2021. The code covers a range of areas, including your board composition, independence, disclosure and transparency, as well as risk management. While this MCCG is targeted at listed company, it will be applicable to companies that are planning to go for listing, as mentioned earlier, that this will be included in the PAP or the PCP. And in the event if there are any deviation, you would have to have an explanation as well. Okay, moving on. So some of the practice codes recommended by SC are as follows. The first one, the position of chairman and CEO should be held by different individuals. So it is very common for private companies, especially smaller ones, to have the same person serve as both the CEO and also your chairman. This may be due to various reasons. Maybe it's your qualifications of your founders or owners, the lack of resources on governance structure, the lack of pressure to demonstrate good corporate governance practices. However, when you are going for an IPO, the position of a chairman and a CEO should be held by different individuals, as the separation of position promotes accountability and also facilitates the deviation of responsibilities between them. So in this regard, no one individual can influence a board's decision. Secondly, at least half of the board should comprise of independent directors. So the code does recommend that 50% of your board should be independent directors. This recommendation is based on the principle that the independent directors can bring a range of perspective and skills to the board and can help to enhance the independence and effectiveness of your board. So for companies considering of listing on the main or ACE market, pursuant to the listing requirement issued by Bursa itself, a person must ensure that at least 2 directors or 1/3 of the board, whichever is higher, are independent directors. Also, it is to be noted that a number of directors, if it's not 3 or a multiple of 3, then the number nearest to 1/3 must be used as your independent director. Okay, and thirdly, for large companies, a board must comprise of a majority of independent directors. So what is considered a large company here? The MCCG recommends that basically a large company would be those companies that is on the FTSE, Bursa Top 100 Index, or a company with market capitalization of 2 billion or above at the start of the company's financial year itself. So in the event, if you fall within any of these categories, you would be considered a large company. Fourthly, a listed company is discouraged from appointing an active politician as a director. So what is considered an active politician? So an active politician is basically a member of parliament, a state assemblyman, or he holds a position at the Supreme Council or division level in a political party. And then moving on to the next slide, one of the aspects of diversity that the MCCG specifically address is the representation of women on the board. So here the board should comprise of at least 30% of women directors. The code recommends that the listed companies should consider appointment of women directors as part of their overall diversity effort, and it encourages companies to set target for increasing the representation of these women on their board. Although it is currently a recommendation, it was announced in Bursa 2022 itself that by the government of Malaysia through SC that it will make it mandatory to at least have 1 female board member for all public companies. So nonetheless, it is highly recommended for applicants to already have in place at least 30% of women directors on their board prior to listing. And this can be seen in most recent prospectuses where the applicants are already adhering to such recommendation. So ladies in this call, here's your sign to get your CV polished and ready, as the market needs a lot of female leaders to be part of their listed entity. Okay, and then we move on to item 6. This is quite self-explanatory. The tenure of an ID should not exceed a term limit of 9 years. This is basically because by the time you have reached 9 years, you will be very familiar with the company. Therefore, you will no longer be, an independent party. However, in the event if you would choose to continue to serve the board, you can actually do so by being a non-independent director. Okay, and lastly, the chairman of the board should not be a member of the audit committee, nomination committee, or remuneration committee. This is because having the same person assume the positions of both the chairman of the board and also chairman of any of these committees will give rise to the risk of self-review and may impair the objectives of the chairman and the board when deliberating on recommendations put forward by the board committee itself. Therefore, the chairman should not be involved in these committees to ensure that there's a proper check and balance. And when going for IPO, this should already be in place. And most of it should be, most of the committee members should comprise of independent directors of the board itself. Okay, moving on to the next slide. Here are 2 extracts from the IPOs that we have previously done. Actually, one we are currently doing. The one on the left is actually Skyworld, which we have submitted to the regulators recently on the main market. So the prospectus is already out on SC's website. And the one on the right is actually L&P Global, which is listed on the ACE market earlier this year as well. So these are actually just samples that we are putting here and are publicly available documents. So for Skyworld, you can see that we have 3 non-independent directors and 4 independent directors. And for L&P Global, we have 3 non-independent directors and 3 independent directors as well, which satisfy the requirement of at least 50% of the board should be made up of independent directors for MCCG and also satisfy the listing requirement where we must ensure that at least 2 directors or 1/3 of the board of the applicant, whichever higher, are independent directors. Also, for both these companies, as you can see, the chairmen are not the CEOs. For Skyworld, you can see that Mr. Lee is the CEO, while for L&P Global, Ms. Oi Leping is the CEO, while the chairpersons are Dato Sri Eng, and also the other one is Ms. Oi Hui Kiang herself. And also from here, you may not be able to note, but they are not the chairman or chairperson or any of the committees in these 3 audit and risk, nomination, remuneration committees, which satisfy the MCCG requirement. So further, for Skyworld, there are 3 female and 4 males, drawing up to approximately 42.9% of the board, which is higher than the recommendation of 30% women. And L&P Global is higher as well, 3 female and 3 males, which makes up to 50% of the board. Okay, moving on. Basically, in the event if you depart from any recommendation of the SC's MCCG requirements, there will be a need for you to disclose it in your PAP or the PCP itself. So where there is such departure, you would have to provide an explanation for the departure, an alternative practice that you have adopted or can achieve the intended outcome, and also for large companies, details of actions which they have taken or intend to take and the time frame for you to achieve this. So for example here, if you're unable to comply with the 30% female condition, you will need to give an explanation for such departure. Maybe it is because the industry that your company is in is not something that is attractive to women in general. Sometimes it may be construction companies or any manufacturing companies. It will really depend. And then in the event if this happen, what would happen is that you would then have to come up with an alternative and a reason why you cannot complete. And in the event if you do, how long does it take for you to make that up? Yeah. Okay. Moving on to the second one, which is the integrity of directors. So what would be disclosed in the PAP or the PCP is basically any matter which may cast doubts on the integrity of the directors or proposed directors. You would have to disclose together with the sponsor and the PA's view. Sponsor here is in relation to your advisor, your main advisor for ACE market listing, and PA is your principal advisor for a main market listing on the suitability of the directors or proposed directors. And you would already have to provide a proposed extraction of disclosure in your prospectus itself. So on the integrity of your directors, there are some due diligence that will be conducted by your advisors, the sponsor, the principal advisor, and also together with us, your legal counsel. The usual things that we would usually do is, and we will conduct an interview on the directors. Basically, during this interview, we would ask questions in relation to your academic qualifications, employments, your past history, whether or not there is any court proceedings against you, whether or not you have been bankrupt before, whether or not you have been part of a company that has been wound up, and so on and so forth. In addition to that, we will also conduct further due diligence check, such as web searches on you. In certain circumstances, we also conduct it in Chinese, on the Chinese web search. And also, we would have to check on your employment histories and also your academic qualifications. There are times where we will have to request for, we would have to write to the relevant institutions to conduct checks in the event if you are unable to provide any supporting documents. So the supporting documents here would mean letters, certificates, and other supporting documents that you have received from your previous universities or your employers. And then we also do personal involvement searches. So these personal involvement searches are actually on your directorships and shareholdings in other companies. This can be done with CCM, where basically we would have to extract out your present and past involvement 5 years ago, and these will all be disclosed in the prospectus itself. So in any event, the directors will also be required to affirm a statutory declaration confirming the information that we will be disclosing in the prospectus, that are those information inside are factual and accurate and up to date lah. Okay. And so on the next slide, this is on ICDM. It is basically something that SC encourages directors to do. It is to register with the Institute of Corporate Directors Malaysia. This is applicable to both independent directors and non-independent directors. To register, we have included the link here in the event if you are interested in registering. Well, in SC's, the ICDM's own word, they believe that the governance is a key driver of sustainability. And by equipping directors with the right skills, knowledge, and mindset, ICDM aims to enhance the professionalism and effectiveness of the board. So here, the minimum requirement for you to be a director in a main market listing, as encouraged by SC, is for you to be a member of the ICDM. As you can see in the membership category here, there are a few categories that you can choose from. Okay, moving on to the third corporate governance issue. Here we have the compliance with the relevant laws. In relation to the disclosure on the PAP and the PCP itself, a statement will have to be made that basically you are in compliance with the relevant laws, regulations, rules, and requirements governing conduct of the business of the group, including compliance of property assets owned or rented by the group. So in essence, you are supposed to comply with all laws, all regulations, all rules, and all requirements prior to going for listing itself. The due diligence that we will be conducting on your company in the event if there are any non-compliances, is that we will usually look at the corporate information. This is in relation to your compliance with the company law, licenses, where we will look at your business license. In the event if you're a manufacturing company, your manufacturing license. In the event if you're a construction company, your CIDB license. And we will also look at the conditions that are imposed by the authorities to ensure that you're in compliance with the conditions themselves. Further, we also look at environment. So we will look at the Environment Quality Act. So basically, if there's anything that affects your environment itself, like emitting gas, disposing waste, or anything like that, we do have to check that you are in compliance with the relevant law that was being imposed on you. Also on the health and safety, we do look at the health and safety of your workplace and also your employees, whether you need a health officer or not. So this is more applicable to places of a manufacturing factory or construction site and things like that. Also, we look at your employment based on the Employment Act, whether or not, that is a new Employment Amendment Act that came about, whether or not your handbook has already incorporated such amendments. So companies do check whether or not your handbooks are up to date. And also on foreign workers, we do have to check on their passport and their work permit to make sure that them working in Malaysia is valid and complying with the law. Lastly, we also look at properties as well, your CCC, in the event if it's a designated premise, whether or not you have a fire certificate, in the event if it's under construction, whether you have the building plans, and does your company comply with the land use. Okay, these are the things that my colleague Diane will actually be speaking more on next week. So in the event if you're interested, do tune into her talk next week. Okay, so in the event, if you find out that you have a non-compliance, what will happen then? So this is something that you will need to disclose in the PAP and the PCP itself. Here we have listed down the things that you would have to disclose, the nature and extent of your non-compliance, the rectification measures taken or to be taken, including the estimated time and cost to rectify this problem, the penalties imposed or the potential maximum penalty which will be imposed on you, the degree of impact or potential impact to the group's business operations and financial performance. And we would also have to state whether or not it has an adverse impact on your business operations itself. And lastly, this would be disclosed in the prospectus. So we will need an extract of it to be included in your PAP and your PCP. So I know that this is something that is quite difficult to understand at this moment. We will have to look at the next slide. Here is an example that's actually given in the guidelines for PAP and PCP itself. So here the company is not in compliance with property that has no CCC. The disclosure matter is the nature of non-compliance. There's a no CCC. The status is that you have a rented warehouse in Klang and you have yet to be given a CCC after you have applied. So the estimated timeline for rectification is 3 months from the day you have applied. The estimated cost is something that your consultant would have to give you. The potential maximum penalty is something that we are able as legal advisors to provide you with pursuant to the law, and the impact of your business itself, whether or not there is any materiality. This is something for you to consider. And if you can see from the bottom there, the book value of the equipment stored there is of a very lesser amount, and then to you it is not of a material concern. Yeah. Okay, and lastly, on non-compliance also, the sponsor and your principal advisor will also have to consider and provide information on the non-compliances when, okay, like individually it is not material, but if you're assessing it collectively, it would be material, and state whether there are any material adverse impact on the business operation and financial conditions of your group. So example here would be, in the event if you're fined by the authority, it's maybe 500 ringgit, but they fine you quite a number of times, then it shows that, maybe you do not have a proper or adequate framework to ensure your corporate governance. So look back at your documents, see if there's anything that you are able to fix at this moment prior to going for listing itself. Flag it up and take steps to rectify in order for you to be ready for listing. Okay, so we have moved to the conclusion stage. Basically, this is the end of my presentation. Back to you, Eugene.
Thanks so much, Lily.
Yeah.
We have time for a few questions. So there is a Q&A function. We may, right at the bottom of the screen. If we don't have time to answer all your queries, not to worry, as the speakers, Mr. Wong has mentioned just now, you can reach out to him, you can email to him separately after this session. And Lily also, I'm sure that if you have questions after this session, I'm sure you can communicate with Lily, you can drop an email directly. Okay. First question, so this is a question to Mr. Wong. How is the performance of the IPO market going to be for this year?
I think in terms of the performance, we are seeing very encouraging response from companies. What we hear feedback from the advisors also, there's lots more inquiry, and a lot more of companies is preparing for listing application. If you've seen the number of IPOs since 2021, right? It was 30 IPOs that was listed, then followed by 35 IPOs in last year, 2022. Up to Jan this year, we have also witnessed 7 IPOs already. So if this traction continues, we think that we can see more than 35 IPOs for 2023.
Okay, sounds like a good year for Bursa Malaysia. Okay,
yeah,
good
for the advisors as well, right?
Yeah. Okay. Okay, so I think this is a question for Lily. Is it a requirement to submit the PAP, PCP to the regulators?
Right. Yes, it is a requirement to submit the PAP or the PCP. So in the past, it is actually something that is not compulsory. But I think, if I'm not mistaken, for the PCP, it was effective around earlier last year, and the PAP was effective around earlier in 2021, where you would have to submit these to the regulators prior to you even submitting your listing applications itself.
Okay, so just to recap for the participants, PAP and PCP. So this is for main market and ACE market. Okay, so main market, the regulator is the Securities Commission. ACE market is Bursa Malaysia. Even though in the case of main market, ultimately you'll be listed on Bursa Malaysia, but the regulator is SE. So PAP is the preliminary application pack. That is a document to be submitted to SE. It's in a prescribed form. So whatever which SE requires for a company which is seeking listing on the main market, you have to fill in the information. By then, your due diligence is almost completed, 80% completed. PCP is pre-admission consultation pack, and that's for ACE market. The function is pretty much the same. Okay, next question will be to Mr. Wong. Is there a minimum profitability to achieve before you can go for IPO?
Well, for main market, there is a profit track record requirement, which requires you to have a minimum 6 million PAT before you submit and accumulated 20 million for 3 to 5 years. Having said that, there is also a market cap route and infrastructure project company criteria that you can list without the profit track record. For the market cap route, then you need to have a minimum 500 million market cap upon listing and minimum 1 year operating revenue. For infrastructure project companies, the project cost should not be less than 500 million and remaining concession period should not be less than 15 years. For ACE and LEAP, there's no minimum profit track record.
Okay. A question to Lily. When are directors required to register with the ICDM?
Okay, so basically you are encouraged to register with the ICDM prior to the submission of your PAP itself. So this is something that is still encouraged, but we do hope that directors who intend to be directors in a company that is going for listing to have yourself registered earlier on to attend the courses that they have and be a member. Yeah. So the answer is prior to submission of your PAP.
Okay, we have time for maybe a few more questions. Okay, this is a question which I think a lot of even my clients are asking. I think it, not sure whether Mr. Wong, you have any updates. Any new update on the migration plan from LEAP to ACE?
This is something that I think we are still working on. If you are aware, the public consultation has came out last year. We have already received the feedback, and right now we are still discussing with SC on the next step.
Okay.
Yeah.
A question for, maybe I get Lily to answer this. Hi, just to get better understanding, how to distinguish ID and non-ID? I presume independent director, non-independent director, how do you distinguish that?
Hi, okay, so for the criteria of an independent director itself is that you are not an executive director of the company and you are not an officer of the company itself within the last 3 years. So basically, you do not have any connection with the company at all. You cannot be a major shareholder as well. This is just coming off my head. You cannot be a family member of an executive director, officer, or a major shareholder. You cannot act as a nominee or representative of any executive director as well. And you cannot be engaged in any transaction with the company, or you are not presently partner, director, major shareholder of any firm. And in the event if you are engaged in it, it has to be of a certain value. Yeah, not more than that value. Yeah.
Okay, there's a question for Mr. Wong. So let's see if it's something which you can respond to. It says, my question to Mr. Wong, is there any specific reason why there has been no cross-listing among ASEAN countries? There is ASEAN disclosure standard since 2013, though, which are supposed to promote cross-listing.
We do have seen some cross-listing, I think the latest one, but I'm not too sure about the Asian disclosure standards. But what we have seen, there are some cross-listing. I think the recent one was OM Holdings. There's a secondary listing in Malaysia. The primary listing was in Australia. But apart from that, I think Top Glove and IHH is also listed in SGX as well as Bursa Malaysia.
Lily, so
Yeah.
this question maybe you can respond to. In terms of preparing for listing, usually there will be a restructuring on a group of companies. Can a company do it before starting the process without paying stamp duty? Or usually this needs approval once they start the listing process?
Without paying stamp duty. Okay, so in the event, if you do not want to pay stamp duty, the process is actually quite tedious. You are looking at Section 15 of the Stamp Act. There are some certain requirements for you to fulfill. In the event, if you are able to fulfill that, and you do not want to pay the stamp duty first, that would take actually a very long period of time. What our clients usually do is actually they pay for the stamp duty first. Thereafter, they will seek for a refund. They will put in the application to seek for the refund. You can actually restructure your company prior to submission, or you can have your restructuring conditional upon your approval. Yeah.
Okay, Lily, one more question for you, because this is on compliance. On the issue of compliance, if it's discovered during the due diligence stage that the applicant does not have a CCC for one of his buildings, and the applicant is now then looking to apply for a CCC for a said building, how detrimental is it to the applicant's IPO, and whether the statement that the applicant is in the process of obtaining the CCC is sufficient to negate the issue?
Well, that's a very long question. So based on our experience together with Eugene itself, is that these days the regulators are very strict on CCC issues. Prior to PAP or PCP itself, we do recommend that you sort all these issues out prior to even submitting that application. But this will also depend on the material, whether this property is material to you or not. And in the event, if it is, are you able to move out for a period of time, leave the property vacant until you are able to get the CCC? Do you have an estimated time frame as to when you will be able to get your CCC? And all these questions that you would already have in hand prior to you submitting for your PAP or your PCP itself.
Okay, so thank you so much. We are out of time. Do sign up for part 3 of our webinar series. So you've got a QR code. You can scan the QR code, or you can actually register through our link on our LinkedIn post. So if you have any questions which remain unanswered, or you think of any questions after this session, please feel free to reach out to Mr. Wong directly. And for legal related questions, please feel free to drop an email to Lily. And also you may ask these questions as we look forward to you joining us on 1st March, 3 p.m. So thank you so much, Mr. Wong from Bursa Malaysia. Thank you for sharing your thoughts. And thanks to my colleague Lily. Thank you so much.
Thank you, everyone. Thank you
Thank
for
you.
attending.
Thanks everyone for attending this session. Thank you so much. Thank you.
Thank you.
Thank you.
Thank you.